Hey, what's up YouTube? Houston here. Hey, if you're thinking about buying a car for you personally or for your business, I would not get a car loan at the moment because many people that have bought multiple cars for like Toro, Getaround and stuff like car sharing and stuff like that, a lot of those cars are being repossessed. Okay? Now, because those cars are being repossessed, this is going to be an opportunity for you to get a nicer car at a cheaper price. All right. Now, I would not use a car loan to get that car. The reason is because if you use a car loan to get that car in this type of climate we're in right now, and say that your income changes and you may not be able to make payments on the car, then you have a repossession on your credit, plus you lose the car. But if you take out a personal loan, okay, if you take out a personal loan and then purchase that car, now if you miss payments on a personal loan, then hey, it only dings you once, but you still have your car. All right. Now, I'm going to tell you about some lenders that I would go to, especially if you have challenging credit. If you have challenging credit, then you definitely want to think about using these lenders, okay? And so the first lender is Avant. Now with Avant, they offer loans from $2,000 up to $35,000, okay? Now their payment terms of 2 years to 5 years. It's a soft pull, but they may look at your FICO A or your Vantage 3 TransUnion, okay? But they can do a soft pull to see what you actually qualify for. All right. Now your average income for this Vantage loan is making at least $1,200 a month. Now another thing, thinking about this, if you're able to get, just say you're able to get a $15,000 personal loan, then you're able to go to the auction with cash and buy a car at a better value. Then you can take a loan on that car. Now you have the car, plus you can take a loan on that car to invest maybe back into your business or to help you start another business or to buy another car. Okay, so that's the reason why I'm sharing this information with you. All right, now there's another reason, but we're going to jump into these loans so we can get this out of the way, and I'll tell you about that other reason. All right, the second loan is Upstart. Now with Upstart, the loans are from $1,000 up to $50,000. All right, and their loans go from 3 years to 5 years. Soft pull, FICO 9 TransUnion. Okay, now you need to be making at least $12,000 a year. The reason that I like these lenders is because of their debt to income ratio. They have a higher threshold of debt to income ratio. Their debt to income ratio for Upstart is 75%. Now with your major banks, their debt to income ratio goes maximum 50-55%. That's for your banks and your banks and your credit unions. That's the reason, like, sometimes you may have great credit, but you have too much of a debt to income ratio, and they may turn you down. All right, so these here type of lenders, they're more flexible. Now please understand that some of their interest rate may be a little higher, but there's a strategy to help you with that as well. Okay, so now you go to the third lender. Your third lender is Upgrade. Now with Upgrade, their loans go from $500 up to $50,000, and they go from 2 years up to 7 years. Now they also pull FICO 9 TransUnion. DTI is 75%. Okay, average credit score, the lowest credit score is a 580. Okay, now for some of these lenders, you don't even need to have a credit score. So if you're new to credit and stuff like that, some of them will work with you even if you don't have any credit to give you a personal loan. All right. Now, again, like I said, I understand that getting a car may be much easier to get, but because of your higher risk of losing the car or defaulting on a loan and stuff, this way, if you get your loan and you may miss a few payments or whatever, sometimes they actually, like with some of these third-party lenders like Upstart, Upgrade, now they have this thing where if you talk with them, they may be able to be flexible enough to allow you to miss a payment. Okay, so that way you still save your credit on the personal side for the personal loan, but you also still have your car. All right, so that's something that you want to think about. Now, here's another one: universal credit loans. Now, universal credit loans, their loans go from 1,000 up to 50,000. Soft pull, FICO 9, TransUnion. Okay, now the interesting thing about them, again, 75% debt to income ratio. That's the reason that I'm pushing you toward these here type of lenders, is because you may have, like I said, you may have a good credit score, but your DTI may be too high. Okay, and also you may have bad credit and you have a low DTI, and these type of lenders may be able to help you as well. All right, now the fifth lender is credit loans. Now, credit loans, it ain't nothing about the credit. Okay, all they're looking at, what's your debt to income ratio, and are you able to pay the money back? Now, their loans go from 500 up to 40,000. All right, now the reason I'm telling you this, and unfortunately because they don't operate in Connecticut and in New York or whatever, but that's okay, because the other loans that I told you about, you may be able to get one of those personal loans to buy your car. Like I said, being able to get at least a $10,000-$15,000 loan and going to the auto auction or auction online to be able to get a better quality of car that you can take a loan out on. Now, here's the interesting thing about it. Say you was able to get the personal loan. Okay, you get the personal loan, you go to the auction, you buy a car. Okay, now the value of that car for retail may be, say you pay 15 for it, but the value of the car may be 25. Now, taking out, once you have the car, taking out a loan against the car through the credit unions or something like that. So now you have the car reporting, but you have a loan against it, but you already have a personal loan. Now, here's where the twist comes involved at. By you utilizing the car, you may decide to put it on Toro Fair or something like that, but by you actually taking that car, making money, making the payments to the credit union, now you're building a relationship with the credit union. So now you're jumping over into the FICO 8 scoring system to help rebuild your credit. The reason that we're looking at this low-hanging fruit for the personal loans and stuff, because it's much easier. All right, now some personal loans that you can get that are with the credit unions, you have Navy Federal. They have a personal loan. They pull TransUnion, FICO 9. You have Penn Fed. They pull Equifax FICO 9. Okay, so you have a couple TransUnions. The bank, Wells Fargo, they may pull your Experian FICO 9. Okay, so you have those type of banks that I would stick with if I was you, especially if I have bad credit and I'm trying to get a car and I'm thinking about using the money to purchase the car. I would go through those lenders as well as the lenders I mentioned. I would do the low-hanging fruit. After I do the low-hanging fruit, building up on the back end, building that relationship on the back end to be able to get more funding so that I can invest in either more car loans or to just start building a business. Now, if you have a question about personal credit, business credit, I want you to click the link in the description and schedule a one-on-one consultation. If you don't know the difference between your FICO 8 credit score or your FICO 9 credit score, again, click the link in the description. Thank you.